We're here at the BMO Metals and Mining Conference, and I'm joined by Sean Boyd, who is the Chief Executive of Agnico Eagle. Thanks for making some time for us today, Sean.
Good to be here.
What is the climate like this year compared to past years, especially in terms of mine financing? Because obviously this is a conference at which typically a lot of deals get done.
There's certainly no shortage of meetings. There's certainly a renewed interest among generalists, but it's still difficult, I think, for the junior space to get capital. The interest we're seeing is more on the more mature businesses that can still grow, businesses that are self-funding and self-sustaining. So if you're in the junior space and you're looking for capital, it's still a bit of a challenge to get those funds.
Yeah, and it's interesting because you guys are a little bit different in that you're doing a massive expansion up in Canada's north, but by and large, everybody is worried about falling production right now. And yet we're not seeing massive amounts of capital investment, even though gold is above $1,300. So what is it going to take, do you think, to really unlock that?
Well, I think part of that is really the discipline that's in the industry now versus 5 or 10 years ago. I think the industry is doing a much better job of allocating capital. But I would say a lot of it is there's just not a lot of large, high-quality projects out there anymore. In fact, there's far too many players in the business for the number of high-quality opportunities that are out there. So you're just not finding the big capital projects that are going to drive gold production growth for the industry. You're likely going to see flat and possibly declining production going forward.
You guys have been pretty clear in the past that you're only interested in gold, but you have Cobalt Assets, and in fact your history is in cobalt, nickel, and silver. Are you tempted at all, given the run-up in cobalt prices, to sort of shake the dust off some of those assets?
We're already dusting them off, we're already looking at them, but more from the perspective of, do they fit with one of the players whose business is just that? That's not our business. We own them. We haven't produced an ounce of silver from those properties since 1988. That was the primary metal, but that's where we started 60 years ago in that camp. How much value is there to surface? It's hard to say. We're doing an analysis now, but we're certainly open to work with those players that have that as their specialty, and maybe there's value that can be surfaced there.
So just for people who may not be familiar, these are the assets in Cobalt, Ontario, that you guys have extensive deposits there. So you're thinking about possibly selling them. Have you been approached by any prospective buyers yet?
We've been approached for people wanting to talk to us about what our intentions are. We've had that land for, as we said, decades. And is it worth a lot more to somebody else than it is to us? Because it's not been a focus. We have not spent capital on it at all, but we're having them reevaluated, and we're open to talk about possibilities around that land package.
Can you give us a ballpark of what it might be worth? Because obviously there would be, I guess, reclamation liabilities as well.
It's hard to say, really. I wouldn't say relative to our market cap it's worth a significant amount. It's not material. I think what we'd be willing to do is entertain a proposition where we'd get some cash, retain a royalty, and have a legitimate business come in and look after the environmental obligations that exist there.
So essentially you'd have a stream on your own asset? Is that what you're describing?
Well, we'd love a royalty just in case somebody really gets lucky, and because it's been such a big part of our history, if that's their focus, let's see what value they can surface there.
It's interesting, you talk about, you've talked to me in the past about the need for consolidation in the industry. Barrick and Newmont are still neck and neck in terms of production for being the largest gold miners in the world. But if you and Goldcorp were to join forces, you guys could really give them a run for their money. Is that something that has been considered in the last year?
No. And I've been here 32 years, and I've heard lots of different ideas about what we should do and how we should do it. And the best strategy for us was to just stick at what we're good at, which is to identify things early stage and build them. And because of that, we've had some of the best performance in the space. In fact, for the second consecutive year, Harvard Business Review, reviewing the S&P Global 1200, Agnico made the top 100, and that's based on our last 20 years of shareholder return. And that's just from systematically building the business from the bottom up. We've got an ability to grow, not only production for reserves, so we're not looking at big M&A at all.
One more quick one just on why gold miners are kind of languishing in broad strokes compared to the run-up that we've seen in gold prices. What do you think the market is waiting for, or I guess that investors are waiting for, before the stocks will start to catch up?
Yeah, good point. Gold was up about 9% last year. A lot of that has not been reflected in the equities. I think investors are trying to understand Janet Yellen's replacement, his view on interest rates, the Fed's view on interest rates. how is inflation sort of settling into the system. If it's there and we get to inflation levels that are over 3%, gold does great there, 15% annualized return. So if this is, could happen, then investors are keenly interested in that. We see them at conferences, we engage them in meetings. They're not there writing big tickets now, but we would expect to see them taking a bigger interest in the gold equities, the quality gold businesses.